Joined by Ricus Reeders. He's from PSG Wealth. Thank you very much for joining us. Good stuff. Now, let's touch on the resources counters. They're taking quite a hit. We're seeing ArcelorMittal, okay, that's an industrial, but that's down 5.7. BHP Billiton down 2.4%. Anglo Gold Ashanti around the same. What's happening with those?
Yeah, it's always difficult to really pin day-to-day moves accurately, but I would imagine it's a combination of factors. First of all, the sense of calm that's returned after Turkey has strengthened the dollar. Plus, you mentioned the Fed funds futures, which are pricing in the possibility of a interest rate increase sooner than expected, is also strengthening that. And when you get a strong dollar, commodity prices tend to go down, and that's we've seen happening in copper and in things like palladium this morning. So I think that's affecting the prices on the one hand, and on the other hand, we've got a slightly stronger slightly stronger rand versus the dollar, and obviously that will also drive down commodity stocks.
It is somewhat confusing, though, because we know that there were reports that obviously people were coming out of your safe haven assets and preferring your more high-yielding, riskier assets, and that would speak to things like commodities, but that's not happening. So where is the money going?
Well, I think, as you said, there was a slight little flight into things like the dollar and like gold and yen, and that's reversed itself a little bit. I think what's happening with the rand specifically, and this is just a thought, is that money that was being channeled towards Turkey might now be stopped and actually flowing into places like Russia, Brazil, and us. In other words, so it's a reallocation of funds to the sort of more riskier assets, excluding Turkey, and that's giving a bit of strength to our own currency. And
then what about oil? We see that price has ticked up a little bit. We know that there's strategic areas around Turkey where oil is transported, but that obviously that threat is now gone.
Well, I won't say it's gone, but at least it's resided somewhere, and as you said, oil flows through Turkey to Western Europe. So the immediate threat there seems to have dissipated. Longer term, there's going to be problems with Turkey because all of a sudden they've got a weakened armed force in the sense that that's split. And with what's happening in the Middle East, Turkey is very important as a base for attacks against ISIS in the Middle East. But that's a long-term global play happening. And how that's going to affect oil prices, we don't know. Short term, though, there is a glut of oil on the market that's slowly getting worked through. But then again, since February of this year, we've also had severe production disruptions, not the least of which has been attacks in Nigeria. So there is this slight strengthening trend in oil, and for the moment, that seems to be continuing.
Now, this week, our Reserve Bank is going to be talking to the nation, telling us what they're deciding on interest rates. They have to worry about the aftermath of Brexit, concerns around, like you say, geopolitical issues like Turkey, things happening in Nice and so on and so forth, and our own domestic issues. Inflation is expected to be slightly higher for the month of June. That data will be coming out on Wednesday. What's your expectation around inflation and what the Reserve Bank will do on interest rates?
I think, as with consensus, I don't expect the Reserve Bank to do anything. Come Thursday, I expect inflation possibly. The risk is to the downside. It might be less than we expect, and there's a number of factors influencing that. First of all is that food inflation, I think, might be slowing down more than expected. And we've had surprises as far as GDP is concerned, all to the downside, and that lessens the case for actually increasing interest rates. So there's a number of factors coming into play that might cause the Reserve Bank not to do anything, and in fact also not have that future urgency for actually increasing interest rates.
Now, given the backdrop that we've discussed, I mean, what is it that you say to your clients who invest money with you about the way forward? How do you try and reassure them that their money is best served in your hands and that you continue to make money for them in a very volatile environment?
I think that volatility is precisely the point. In other words, there's a lot of noise going on. Even if one takes a look globally, returns on the equity market is more and more influenced by macro events. What's happening in Turkey, what's happening in France, rather than company earnings specific. And that move as a result of macro things, which doesn't really focus on what companies are doing, what kind of profit they are making, is creating opportunity. In other words, where you do get companies who have fantastic earnings, great cash flow, that type of thing, but because of what's happening globally, their prices are unduly suppressed. It's a wonderful place to actually create value if one can identify those assets. So it's look beyond the noise, let's concentrate on the fundamentals, and let's make sure that when major events happen, Brexit, you don't have to do something immediately, but you can move your focus and plan for the future.
And very briefly, to those sort of budding investors at home who are doing stuff online, for example, what sort of stocks would you be looking at right now? What opportunities are there?
Well, again, stick to the basics. Companies with a good dividend return, great cash flows in the right kind of market, but looking ahead 2, 3, 5 years from now, not merely what's happening on a Friday evening or on a Thursday afternoon when there's a rates release.
Okay, good advice. Thanks very much. That was Ricus Reeders. He's from PSG Wealth. After the break, Francis has more business news for you.